In the past week, the stock market's been characterized by significant volatility, driven by a combination of economic data releases, geopolitical tensions, and shifting investor sentiment. If you watch the headlines, you might feel like the sky is falling and that we're on the edge of doomsday. The increased volatility underscores the dynamic nature of financial markets, where multiple factors can rapidly change market direction and investor confidence. Here are some of the reasons that I see which contributed to the downturn in stocks. One of the primary drivers of the market's volatility was the release of key economic data. Throughout the week, investors closely monitored reports on inflation, employment, and consumer spending, all of which provided insights into the health of the economy and the potential direction of monetary policy. For instance, an unexpected high inflation report indicated that prices were rising faster than anticipated, which could lead to more aggressive interest rate hikes by central banks, particularly the Federal Reserve of the United States. This prospect of tighter monetary policy often leads to a sell-off in equities, as higher interest rates can reduce corporate profits and make bonds more attractive compared to stocks. Second, geopolitical factors also contributed to the stock market's instability. Ongoing conflicts and diplomatic tensions, particularly in regions with significant global economic influence, can lead to increased risk aversion among investors. For instance, any escalation in trade disputes or military conflicts can disrupt global supply chains and impact commodity prices, and it generally creates a more uncertain economic environment. Last week, reports of rising tensions in various geopolitical hotspots, including trade tensions between major economies and conflicts in the Middle East, led to bouts of selling in riskier assets like stocks. Third, investor sentiment played a crucial role in the market's volatility last week. The stock market is not just driven by fundamentals like earnings or economic data, but also by how investors feel about the future. Last week, sentiment was particularly fragile, with investors swinging between optimism and pessimism based on daily news flow. Since last November, 7 stocks, dubbed the Magnificent Seven, have been the primary drivers of market performance. Their valuations, as indicated by their price-to-earnings ratios, have reached extreme expensive conditions, and so some investors have determined that it's time to take profits by selling their high flyers. Reports of hedge funds and other big players adjusting their positions in response to the week's economic data and geopolitical events likely contributed to the rapid shift in stock prices. So what are we going to do about this? Well, the stock market's volatility over the past week was a product of several interconnected factors, including economic data releases, geopolitical tensions, and fluctuating investor sentiment. Each of these elements alone can move the market, but their combined impact created a particularly turbulent environment for investors. This period of volatility serves as a reminder of the complexities of financial markets and the importance of staying informed about the myriad factors that can influence stock prices. The bad news is that the market shed a couple percentage points off the highs that were reached in July. The good news is that the market remains in positive territory for the year. Our portfolios remain well balanced with a combination of stocks, bonds, and alternative assets in anticipation of this kind of market volatility. In July, we had already begun rebalancing by selling some of our stock ETFs and buffered ETFs to take profits off the table. We invested in a combination of low correlation funds, which we believe should provide some downside protection and lower correlation to the markets. Our goal is to have investments that zig when others zag and vice versa. Our gold and precious metals investments continue to be what we believe is the best part of our portfolios in 2024, and they held up very well over the past week when the stock market fell. That's what true diversification is supposed to do. As always, my team and I will continue to watch these developments closely as we navigate the challenges of an unpredictable investment landscape. Thank you for the confidence that you've placed in us. If you like this video, share it with a friend, and don't forget to put our mid-year economic update town hall webinar on your calendar. It will be held on Thursday, August 15th at 7 p.m. Feel free to contact the office for more details.